Welcome back to the Dinar Community Channel, your trusted destination for real-time updates, in-depth analysis, and all things related to Iraq's currency and economic future. Today's video is one you'll want to stick around for. So pour yourself a cup of chai or coffee, get comfortable, and let's explore the latest developments that could shape Iraq's financial landscape. We're talking about the 2025 budget, oil strategies, and yes, the long-anticipated potential revaluation of the Iraqi dinar. Things are getting interesting. There's buzz coming from Iraq's financial and political sectors. And this isn't just typical chatter. Top officials, economists, central bank figures, and even global financial leaders are all starting to circle around the same critical question: is it time to revalue the dinar? And if so, when? Just a few days ago, a headline grabbed our attention. Is the 2025 budget heading toward financial trouble? You guessed it. Oil prices are once again the focal point of economic concern. The budget is built on a projected price of $65 per barrel. But with recent price dips, many are asking, can Iraq keep things afloat if the market slips further? Prime Minister Soudani has tried to downplay the risks, assuring the public that there's no major cause for alarm. But some financial experts and central bank officials warn otherwise. If crude prices fall below that target, Iraq could face serious financial hurdles. Enter the talk of revaluation. Some voices within Iraq and the global Dinar community are now suggesting that adjusting the exchange rate might be a solution to stabilize the economy, close the budget gap, and build a more trusted currency. Behind closed doors, we're hearing that the Iraqi government is actively evaluating its options. Ground-level sources like Frank 26 and Firefly, who closely monitor updates from within Iraq, are pointing to significant clues. Firefly reports that ongoing budget delays, oil output resumption, and government employee back pay all seem to tie back to one key issue: a new exchange rate. He and others believe that the only thing holding back full progress is the rate change. Without it, nothing else lines up. Why the hold-up? Why the secrecy? Everything appears to be in a holding pattern, waiting for a single event to happen. Let's talk numbers for a second. Right now, Iraq's official exchange rate is about 1,310 Iraqi dinars to $1. But according to many in the community, this number just doesn't reflect Iraq's economic strength or its massive oil wealth. A more realistic rate would better reflect Iraq's actual potential on the global stage. And then came the shocker. Intel source Bruce, via WiserNow, dropped a major piece of news, claiming that former US President Donald Trump met privately with heads from major US banks, Citibank, Chase, Wells Fargo, and Bank of America. In that meeting, he allegedly confirmed that the Iraqi dinar has already revalued, not might or could, but has. He even quoted a new rate, over $6.20 per IQD within Iraq. According to Bruce, that rate is already being quietly traded on Forex platforms and could continue climbing as global markets adjust. Redemption centers, he claims, are already prepped and standing by, adding serious fuel to the fire. Another respected name in the space, Sandy Ingram, has been closely watching the dinar's behavior. She confirms that the rate remains steady between 1305 to 13010, but more importantly, highlights the Central Bank of Iraq's push toward a fully digital currency system. This move could shut down black market trading, unify official and street-level rates, and build the foundation for a modern monetary structure. A digital dinar would also enhance Iraq's reputation on the global stage, helping the country align with international banking norms, crack down on corruption, and boost transparency in the financial sector. Think about it. For the first time in years, everything seems to be aligning. Oil strategies are evolving. The central bank is driving digital reform. Fiscal responsibility is in focus. And now, exchange rate revision is gaining serious momentum. Skeptics will say, "We've heard this before." And sure, talk of a revaluation isn't new, but what's different this time is how unified the message is. This isn't just speculation in forums anymore. We're seeing this topic discussed by parliamentary members, financial institutions, central bank insiders, and global finance elites, all at the same time. That kind of synchronicity means something. Let's zoom out. Iraq is still deeply reliant on oil, with over 90% of its national revenue tied to oil exports. That makes the country highly vulnerable to oil price swings. When prices rise, the economy thrives. When they fall, budgets tighten. And right now, that tightening is starting to pinch. The 2025 budget is based on $65 per barrel. But if oil prices drop or stay unstable, Iraq could struggle to fund.